What do these trades that we have taken profit during the last 3 days have in common? They are operations that take advantage of the upward trend movement that this asset has had in recent days. And I make this introduction because today we will see one of the most effective strategies when trading, especially taking advantage of these trend movements, both bullish and bearish. It is focused mainly on a time frame of 15 minutes, so it is perfect for day trading. We can use it in all types of assets, whether forex, traditional markets and stocks, and even cryptocurrencies. It is also a very special strategy that will help us to maximize our profits in these trend movements, which will not have a fixed coefficient of operation, but there will be times that we even get ratios of 10-to-1 or 20-to-1. It all depends on the strength of the trend. Welcome one more day to the trader's game. And before we start, we have created for all of you a free community on Telegram where we will be informing you day after day of what is happening in the financial markets. It is completely free. You will have the link in the description, so do not forget to sign up, because in the markets the most important thing is to always be informed. And for all those who are looking for the best platforms with the best free bonuses if you want to start in the world of trading, you will also have the trading bonus page in the description. You can even sign up for their newsletter, so that every week they send you an analysis of everything that has been happening in the market during the week directly to your inbox. And let's start placing the indicators. We need to start with the strategy. But first of all, if you like our videos, you know that you can leave us a nice like, that is completely free, and share our content with your friends who like the world of trading. Today we are on the Bitcoin chart in the 15 minutes time frame. The first thing we would have to add would be 2 exponential moving averages. We look for EMA in the indicators area and we get the first one. Click twice and now let's configure them. The first one we are going to put, for example, in yellow color. We are also going to make it a little thicker, since it is going to be our main average of 200 periods. We click on accept, and now we are going to configure the second one. This time we place it of 50 periods where it says length. And in style we are going to give it, for example, a white color and a thickness a little less than the previous one. Already when placing the 2 averages we can see that clear uptrend that has been forming in recent days. Now we look for these 2 indicators that will help us to maximize our trend operations. The first one would be the trend meter. We click and we would get something like this. We would have to go to configuration and we would remove these first 2 options in the style section, the data entry, and all the rest we would leave it the same. We accept and we are going to look for the second indicator, which would be the volatility oscillator. It would already come out here below and we are going to configure it. In this indicator we do not really have to change the data entries, but in style I would remove these options here, only so that they do not bother us visually, and we have a clean graph. We could also remove this part of here, which is the one that would give us a background, to mark a little more all those inner areas when the spikes occur, but well, we will not need them either. I would also clean up by removing the 0 line, and as you see our indicator is already much cleaner, especially because the only thing that we are going to need for this strategy would be to act when these volatility spikes occur, which do not have to be so exaggerated, as for example happens at this point, when it crosses the white line upwards with the top if we are looking for entries in long, and on the contrary we would look for those crosses at the bottom if we were looking for operations in short. And now we go directly to the rules of the strategy. The first thing we have to be very clear is that if the price is above our averages we will look for long trades, and if the price is below we will look for short trades. And now that we know that in this case we should look for a long trade, since the trend is up and the price is above our averages, what are the following rules that we have to take into account to find the perfect entry? The first one is that we always have to look for our trend meter to show a green dot on this top, and that there are 4 in total on this line vertically, and also that we also have these 2 horizontal lines in green. At that point we would look at our volume oscillator, which would also be above that top line, so we already have the perfect entry. Even if we were to place a vertical line, as you see, we would match everything. And this is the candle that we should open our entry, this time the long, at its close. We place our operation there, we put our stop loss below the previous lows, and now comes the most important thing, and also where we are going to get more benefit from this long-term strategy, and is that our take profit is not fixed, We do not have to put it to coefficient 1.5/1 or coefficient 2/1 or anything like that. But we simply have to look when the first red dot appears on this first line in our trend meter, because it would mean that right there would already be starting to have a little more resistance to our uptrend. Well, we mark that first red dot, and we would place our take profit there, since it would be where we have taken profits in our operation. As you see, in the end it does not come out of a ratio 3.85/1, that is to say an impressive operation. We have another example a little further on where we also locate those 4 green points. The horizontal lines are also in green, and at the bottom the volume also accompanies us, so we would place our entry there. And at this point you might think, this entry does not seem to go very well. And here is one of the tricks of this strategy, and is that if you always perform it in a serious and disciplined way, very few times you will exit in losses, basically because, as I said, we always take the first red point to take profits, but only in the case that this red point is given when our operation is already in positive. That is to say, in this particular we see that the first red point is given when the price is below our entry, so we do not have to do anything, we just wait. We have our stop loss there. In the case that it goes back we would lose operation. But as you see this strategy to be based 100% on these trend impulses, we would only have to wait for the price to return to be positive in our operation, and then we would wait for the first red dot, which as you see would be this here. We mark it so that you see it better, and we will adjust our take profit there. The operation itself is not very good, and as you can see, in spite of starting in negative, we ended up gaining 0.46%. We are now looking for an example in a downtrend. As you can see, there has been this crossing of averages down, and the price has already begun to fall, and we always have to take advantage of this type of pullbacks to the averages that occur to continue falling. We detect here a very peculiar case because, as you can see, we do have those 4 red points. We also have that volatility peaking below that blue line, and we would also have just the 2 lines in red, just a very little. Just in this top we see that there is a space in red, but everything matches perfectly. We place our operation in short, stop loss above the previous lows. And now we would wait for when the operation was in positive, we would mark the first green point to get out in profits, and it would be, as you see, this one here, just in this candle, and we would have our operation done with a coefficient 1.86, not bad. Here we would have another 2 positive operations, and here we would get the first negative. Obviously we will always fail some, but if you look at it, is right in the area where the price starts to lateralize again. You have to be very careful and always take advantage of this strategy. The more distance there is between the middle of both averages, that is always going to be more effective if we have a distance of this style, very wide, than if we have a smaller distance, because it means that the price could be changing trend again or starting to lateralize, as always occurs before we have a clear trend and obviously after, which are the so-called areas of accumulation, distribution, or consolidation. The strategy has been backtested for several months with incredible results. We have achieved a win rate above 75%, but also with very high profits. That is, if the strategy is performed in the strict way that we have mentioned, we will get many operations with very high ratios. We have had from 2-to-1 ratios to ratios of 20-to-1. And of course, taking advantage of these operations in long trends will always compensate us for some losses that we will have in other less clear trends. We encourage you all to try it and let us know in the comments below what you think, how much profit you are getting in the long term. And if you like our videos, give us a piece of like that is free. We will leave in the description the link to the best cryptocurrency trading platform in the world, and see you in the next video.